really asset class agnostic, and I'm on the operator general partner side, and that's really kind of the ship.
Nice.
And so what I specialize in is just really all things real estate.
Nice. So we're just talking about, in general, the real estate and what everyone thinks of what's going to happen here in the market. And I was just telling them that I'm noticing that there's an increase in vacancies in Las Vegas in rentals, just in general.
Yeah.
But that is pretty normal, though. 4% is pretty normal. 1% is not healthy at all. It's not normal at all. And I believe that the rents have increased here in Las Vegas, a 6.5% rent growth. And that's actually not even that bad. Some states have like a crazy 19% increase, 20% increase in rents. One of them was like almost 10% increase. So there's increases in rents across the board everywhere. But that is slowly stabilizing. And when people look at these numbers, they automatically think market crash. But what are one of the reasons why you think that it's not going to be a market crash?
I don't think it's going to be a market crash. And it's more, you have to look at your markets. If I'm in San Francisco or New York, I have a different perspective than if I'm in Las Vegas or Phoenix. And it's really about population growth and the underlying employment drivers. So like for Vegas, since 2015, manufacturing employment has grown by 27%. Wages need to tick up. The Strip has been having all-time highs for gaming revenue every month. And, it's just becoming a question of affordability for a lot of people. But at the end of the day, I don't think there's going to be a market crash. I think there's going to be a slight correction in certain sectors, maybe 5 to 10%. But, that's healthy. 20% to 25% annual appreciation for real estate isn't sustainable. It's not healthy when, historicals are more at like 6% continuing appreciation. So I think for people, they're really just kind of freaked out. They're trying to capture on their equity in their homes, but I don't think we're still undersupplied on housing. And I just don't see a housing crash, but I do see, maybe like a 5% drop to reality as these interest rates tick up, just like how Jerome Powell came out today. Inflation's still stable. It's still in that 8% range, and he still is going to continue to raise rates by 50 basis points next month, which definitely puts downward pressure on prices and just restricts the amount of borrowers that can go after certain homes. And I think it's just more perpetual fear. It's a short-term thing, not a long-term thing, like what happened in 08, where there was just a massive supply.
Yeah, I think what happened in 08, nobody saw it coming, and nobody knew what to do in that circumstance. So it just kind of just fell apart. This time around, I believe, and I went to a conference a year ago where they were discussing, major banks were discussing foreclosures, and they've learned very well. They hired very smart people to not do that mistake ever again. So even if there's numerous amounts of defaults, what they're doing is, instead of putting in a foreclosure, the homeowners are just putting it up in the market for sale with equity. And that's really what's going on. That's really what's going to happen. Do I believe that there's going to be a market crash in some cities, like you mentioned? Some cities are struggling. Those are the cities where investors are actually investing in right now, because the real estate is low at right now at the moment, but will not stay there forever.
No, and it's very interesting. I also think, just to touch on your foreclosure comment, like we saw in COVID, there was a lot of workarounds. There was like, hey, I'm behind on my payments. Hey, how can we work with you? Because banks, contrary to popular belief, banks don't want to take back your house. They don't want to do a short sale. They don't want to manage your properties. It doesn't look good on their books, and they're more willing to do the workarounds. And on top of that, comparing this to 08, the lending requirements are a lot more stringent. So people who got these loans and these home loans had to be vetted. It wasn't the doorman at a hotel on the Strip owning 5 condos and having 0% down. You had to put money down. You had to, really get vetted, and you had to prove up all your paperwork. And that's just for one home. don't even get me started on people trying to get a second property,
right?
For which just only applies to a small percentage of homeowners. But that was even worse because they really want to make sure you can prove up the income. So again, I think it's people have good basis. I also think there's another thing called it's called the rate lock theory. And so these people who locked in rates at sub 3%, sub 4%, now have gotten 100, 200 in equity depreciation over the last 2 to 3 years. Even if they can't capitalize. They just can't because they sell their home. Those homes have appreciated in their market, and the interest rates have gone up. So and their mortgages are going to go up. It's like, why would I go for a lesser house, less square feet, and it costs me more?
Yeah, exactly.
And so they would rather just sit in their homes and try to use a HELOC or refi out.
Right. And I'm looking at the different types of vacancies. It's actually 6.9% vacancy rate in Las Vegas. But here's why I don't think that's going to be a problem. There's been a population increase here in Las Vegas of 7.2%. That's over 180,000 residents. And so the population here is continuing to increase. There's like an exodus in California. Everyone's moving from California and all over different states to Las Vegas because of all the benefits that we have here. The taxes, the rent's still affordable. There's still a lot of jobs available for people and so on. So it just really does depend on your market, what city you're in. And it really does come down to it. And it's consumer fear that really has a lot to do with the real estate market crash.
No, and I also think like this, just going back on market specifics, like right now I'm calling you from Salt Lake City, where the average household size is about 4.2 people per household. It's just from that Mormon religion culture where people tend to have more of a family-oriented culture, whereas Las Vegas has a household size of 2.1 people. It's traditionally single people and couples that live in Las Vegas. And so, that's another factor. These people that are moving in, it's not as many people, so you need more housing. Because it's really only 1 or 2 people per household. So again, just propping up the market and seeing everything like that. And I also agree with you, like, we want like a little 5 to 10% vacancy. That's healthy. Again, these 1% vacancies where it's just parabolic up price increases, people can't afford that, and they'll go to more affordable markets to just be able to survive rather than just live paycheck to paycheck. But I totally agree with what you're saying.
Well, so here's the thing. If you had to make a decision, and this is one thing I tell my clients all the time, my agents as well, if your clients want to make a decision on whether they're buying or selling their home and when's a good time, well, a good time is when it's personal. When is your good time? Don't worry about the market. The market's going to do what the market's going to do. No matter what, you're still going to have to live somewhere. So you're paying rent, whether you want to pay rent to yourself or want to pay rent to a landlord, that is completely up to you. But the best time to purchase a home is when you're personally ready to purchase a home, not when the market's doing. Well,
and there is one thing I will throw in there as a personal thing for me, and kind of how I evaluate it is how much is a rental, like say for a 3-bed 2-bath house, 2-bath house, 1,500 square feet, very standard. What's the price if I rent it per month versus if I have a mortgage per month? And if the mortgage exceeds the cost of the rent substantially, rent if that's what's more comfortable for you. Or even if the mortgage is less, do the mortgage rate. Or if like, hey, I always also tell people this: are you planning on staying in the property for more than 3 years or more than 5 years? Then buy the house. Like,
exactly.
It's all about exactly what you said. It's your personal life. But if you're going to buy a house and you're going to live in it for
6 months,
at least
a year,
2 to 3 years, something like that, to capitalize on the primary residence tax benefits. Is if you're a single person, it's $250,000. If you're a married couple, it's $500,000 in capital gains that comes out tax free as your primary residence. If you live in a house for 2 out of 5 years as your primary, it's a lot of money to a lot of people. So it's a good tax savings. But again, you're exactly right. It comes down to personal timing and
Personal timing.
life, and
Yeah.
it is what it is. Yeah.
So as always, focus on getting yourself prepared and ready. I think that's extremely important. Let's talk about what your recent post caught my attention. How many outages across the nation, you said? Electricity outages?
So 20 million.
20
Yeah,
million.
so 20 million households are behind on their power bills. So there's two really interesting topics to me. It's 20 million people are behind on their households, which is 1 in 6 U.S. households, and they're at risk of major shutoffs, which I don't think that's ever happened in the history of the U.S. I guess just critical mass. And then another topic that I will be posting and talking about a little bit more is the car repossession business. Car repos are one of the fastest growing businesses in America right now. The average car payment is $1,000 a month. That's an all-time high to people. So these underlying fundamentals of affordability and, life expectations of how people are living, they're overextending, or
yes,
they're
absolutely.
like exactly what you kind of just me offline. These people are paying their utility bills on credit cards. They're paying basic life necessities on borrowed credit that you shouldn't be doing. That should be a cash thing, just like your rent, just like your water, any utility. That's what it is. So I found that funny, and it's going to be interesting to see what's coming up here in the next several months. It's going to be very
interesting, but if anything, I'm going to tell you, if anything, even if the economy crashes, the real estate, if anything, the real estate is going to go up instead for a lot of reasons, because your number one thing, most important thing, is having a roof over your head. That is the most important thing. So I mean, and people have their mixed opinions and everything, but what caused the bubble in 2008 and other times was nothing similar to what's going on. This is the first time we've ever experienced anything similar to this. And it's kind of like a mixture of things going on at the same time. But let me tell you, if anything, I personally believe that real estate is going to be more valuable than anything, because you can't get rid of real estate, and everyone needs a place to stay in.
Yeah. I mean, and the only thing I'm seeing, I was just with some people, and again, the same sector of development, and they're national developers, and we all say this is short-term paranoia. This is short-term fear. This is the people who, thought they had the diamond in the rough, and that their quote-unquote shit doesn't stink, and they're asking top dollar, but their product type was just very subject to interest rates. And I'm like, no, like the underlying fundamentals are strong. You just bought into the interest rate versus the rental arbitrage, and it was just poor investments, in my opinion, with unsophisticated capital coming into the marketplace, and just trying to manipulate the market to a certain degree, like Zillow was doing with home buying. And then obviously, as you know, they stopped because they got caught with the bag, and they kind of saw what was happening. But at the end of the day, unemployment is at an all-time low. Wages are at an all-time high. Yes, we have cost increases, and that's what's driving inflation on gas and materials, but that's another thing. Materials are still high. So to replace a house is still, if you buy below replacement cost, you're making a good investment. That's always my perspective. Buy below replacement cost in a good area, and you're going to be fine. And the real estate will always be there.
Right.
So, I agree with you.
Yeah. Commercial real estate. Some of the markets have slowed down as far as commercial. Personally, here in Las Vegas, it slowed down. The warehousing exodus slowed down as well. There's not as many people desperate to buy warehouses here in Las Vegas as there was like a few months ago. But that is completely normal. Hotels are also, there was a slowdown during the summertime. That's a mixture of reasons, though, because we have this all this political things going on. So of course there's going to be a slowdown. But I personally don't see this slowing down and having a major market crash like people believe that there's going to be tons of foreclosures.
No, I don't see the foreclosures coming to market. Again, touching on our conversation earlier, the debtors and the people who own all these loans, they're willing to work with landlords. They're willing to work with people because it takes a lot of time and effort to take back a property and then take it to market. These guys aren't managers. They're more just, hey, we will lend them money for a reason. And they're more coupon clippers than anything else. So I agree with you. And also, for Vegas specifically, summer has always been slow. Summer historically has always been slow. Nobody wants to go see properties or see houses or tour around town, when it's 110 degrees outside, when it's summer and their kids are all out of school, they want to take them on vacations. It'll be very interesting to see kind of what happens here after Labor Day to keep it going.
So investors are still investing in Las Vegas apartments. They're paying crazy amount of dollars per door. This past transaction, 2 Las Vegas area apartment deals totaling more than $100 million, both nearly doubling their last deal prices. It's crazy. I mean, if they thought that there was going to be a market crash in Las Vegas and things were going to not be so great, I don't see investors honestly investing so much money in apartments and doubling their, actually paying double of what some investors paid just a few years ago. So Vegas is still a great market. Are there other better areas in the nation? Yeah, absolutely. Some of my investors are like I mentioned earlier, they're investing in little cities where they know it's booming. There's a population boom, but it's still low enough. So if you're that type of investor that likes to travel and go to places and check them out, Park City is a great city. It's one of the cities that has quadrupled in prices since just a few years ago.
Yeah, no, I'm literally up here this weekend. That's where I'm at right now. And so I'm up in Park City literally right now, and yeah, you're exactly right. Again, like even Park City, vacation town is well insulated because the typical people who own this, like it's second home ownership. These people don't need to sell these homes, like they're comfortable making it. Like, So again, it's really just pocket based. It's what are the underlying employment drivers, and I just don't think you're going to see anything else. Home sales have slowed down up in Park City, so have land sales. But I think it's not because necessarily of affordability. It's more because people don't know what's going on. It's more of I call it buyer and seller psychology. It seems like we're all in an elevator looking at each other, waiting to see who's the first person to get off on what floor. We're all just waiting for somebody to start making moves, and because none of us know what we're doing. And so we're all just in uncharted territory, a lot of economic and, political uncertainty, like you're saying, but, I'm still buying. My criteria has just changed. That's all it is. I ain't stopping.
Right. Yeah. So as an investor, and you're still buying, what is one of the reasons that you pick real estate versus stocks and Bitcoin and all the other stuff?
So I can control real estate. I believe in real estate, you can control your own destiny, and just like with any asset, you make your money on the buy. And also with real estate, there's strong historical predictability and pricing because it's an illiquid asset. Unlike stocks and crypto, stocks, you have various exchanges that have trading times. Now they're even switching to more 24-hour trading, the FX and currency market's a 24/7 cycle. Crypto is a 24/7 cycle, and the volatility is just drastic. And, for me, real estate, again, if it's a growing population, that's the number one driver of real estate, population growth. So in Vegas, with all this money being invested, jobs being created, that's critical for underlying fundamental value. So for me as an investor, it's more hey, pricing expectations are a little bit more uncertain than they were 12 months ago. So I just have to buy more aggressively. And if it doesn't work out, it doesn't work out. But, for the last 6 to 24 months, sellers had all the power. Well, now we're approaching an equilibrium market. I think people forgot what that was like. And we're just heading back towards normalcy. It's not a crash, it's normalcy.
Yeah.
Sit for 30 days, 45 days. It's okay.
Agents that happen in the Yeah, I don't know how long you've been in the industry, but agents like myself and other couple of my colleagues that have been in the industry for almost 20 years, they're like, oh, it's nothing. The rates used to be 10%. Anything under 10% was awesome. You know, it's really how you ride the wave is how you're going to survive in this market.
Yeah. Yeah, so I think that's really just kind of the key thing. And it's what's your asset class? What's your goals? Like, again, going back to personal stuff, like for investments, like, you know, before this, like I saw a lot of people loading up on 10-year plus fixed money, you know, with long-term financing. Like, that's what they were going for. They were looking for good quality products that they can hold for 7 to 10 years. Now, these short-term bridge debt, you know, hard money, you know, commercial loan acquisitions where they were expecting it to get out in, you know, a year to 3 years or 3 to 5 years. And they were, you know, leveraging up very high and were very subject to, you know, interest rate risk or market activity. You know, they're in a different spot. But again, like, I think this is a 12 to 18 month thing. And I think we've been in a recession since, you know, early Q2, you know, so like April, May, and, you know, it really hit home in June and July, and here we are in August. So I just don't see, you know, long-term negative effects. And, you know, I was just reading an article the other day from Berkadia, who's a big, you know, capital markets and commercial brokerage firm in the U.S. And, you know, basically saying, like, dude, GDP is expanding still. You know, GDP, like, businesses are expanding, people are expanding. That's just where you got. And also go back on your housing comment, like, in places where they're tax advantaged states or economies like Vegas, people are still liquidating money out of high tax states like California and New York, or, you know, pro tenant states like Washington and Oregon, where, you know, somebody can squat in a house for 12 months, are coming to Vegas and Nevada and Utah and Arizona and Idaho because they're more landlord friendly. So again, it's just we're red state people, right? You know, Nevada's kind of purple, but like, I'm a red state investor because of that. And as long as you invest in these red states where they favor the landlord, you're going to be fine. Yeah. You know, and again, just what's your investment goals? Is it a year, 3 years, 5 years, 7, 10, forever holder? You know, like, that's just all that matters. But you can definitely pick up some deals in this market. So, because some people just are freaking.
$1 million question. As an investor, you mentioned you invest in red states. What is your favorite state to invest in?
Definitely Nevada.
Okay. You said it was purple.
Nevada, as of right now, I think if not, it's
but we forget that Nevada.
State, I'd say Florida.
Yeah, we forget that Nevada is not just Las Vegas. There's Reno, there's Elko, there's different cities in Nevada that are currently growing in population and are doing phenomenal. So it's not just Nevada; it's what city and it's state that you're investing in as well. So Florida is
I'd say Florida's number one. Like Tampa is just going through the roof, no slowdown in sight, great market fundamentals. I also look to a lot of cities. Like, the one thing I don't like about Vegas is there's a theory of the golden handcuffs. We don't have the education system to drive a high white collar earning job opportunities.
Right, I agree with you.
Increase in the median income. Yeah. And whereas, like, you know, Tampa, I think they produce like, you know, 30 to 40,000 undergraduates a year in their market. Another reason why we love Phoenix is because of ASU, University of Phoenix, Grand Canyon, U of A. They produce more undergraduates in a market than anywhere else in the country. And, you know, it's even these are like entry-level worker bee type of roles. They're still educated workforces. And I think that's more of what we're looking for is where's the education over the long term to support this economy? You know, I don't want to have to pull in labor from other markets.
That's absolutely right. Well, one of the reasons why the Sunbelt, every single market in the Sunbelt is doing great is because the increase of technology and jobs that are more corporate. So those are the cities that are doing well. that are more tech-based work field than any other cities out there. So you have Texas, you have Arizona, you have Nevada now, and you have some places in California that are doing really good. Fortunately, California, there's a lot of companies closing down and moving to other states. So, and we all know why the taxes are crazy there.
Yeah. Oh, it's rough. It's rough to get anything done over there. I have an ongoing Lagoon Beach, California, and my stepmother and a home builder out there, and we have the running fan. He said never good of dolphin and whale migration patterns than I do about building homes because of just the California Coastal Commission.
Yeah.
Like you have to go through a lot of red tape to just even get a housing permit.
Yeah.
It's crazy.
Yeah, it's they kind of build their own poison there by making it so hard to do anything over there. But yeah, so as far as an economy crash, I don't know, that's up in the air. But real estate crash, I don't believe that. Let me see what the poll says. I'm curious. So far the poll was 60%. There's going to be a market crash. That's what everybody believes. 30% no. Or the rest of it was like no. So I think about 10% of it was like it's unpredictable, and basically almost every single person voted they all believe there's going to be a real estate market crash. So that's why I wanted to go on here on the live and get everyone's opinion, and why they believe that is the question.
Yeah. No, I mean, a lot of people, they read headlines. It's a lot of people read headlines. They don't look at the fundamentals. Like I said, we build housing tracts. I build master plan communities. We do land development. We flip homes. We do rentals. Do apartments, do office buildings, industrial, and it's really market by market. It's asset class by asset class, and it's zip code by zip code. And exactly what you said, good product's going to be good product, and you're going to be good. And then people always need a place to live. So again, I think it's just really where are you getting your sources from, and what's going on. But I'm not going to deny that there are going to be opportunities to really capitalize on in fear, or because people just had poor timing with their lending sources.
Right.
So I think there's going to be some very strong opportunities for a lot of people. But I don't see an overall market crash coming whatsoever.
No, they're just more opportunity based. And as always, timing. And you have to understand, investors are always ready, and they study the market, and that's why a lot of people miss out on opportunities, because they're always on the fence and waiting, while your investor is already remodeling the house down the road and putting it on the market and making an extra 40, 50K. That's just the way it is. So it just depends on how you really acquire the knowledge, how you are. Okay, you're gonna have to boogie. Bye.
I have to go. Gigi, I appreciate you. Thank you so much for having me on. And
all right.
We'll talk soon.
Okay, take care. Bye-bye.
Yeah.
Bye. All right. I think I'm going to have to leave. It's like 30 minutes in. Thank you so much for this live. I had a ton of fun. That was really good information that he gave there. I hope you guys learned something. I'm going to try and do another live next week. But have a happy weekend, guys.